This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
For me, I said, I want to make $500,000 a year in passive income within 10 years. This is when I turned 30. This was 4 years ago. And so for the last 4 years, basically, I have made it a goal that one asset purchase per year that nets me $50,000 a year in passive income. When all is said and done, when all expenses are paid, when, debt service is covered, my true net brings me in $50,000 a year.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. Entrepreneurship requires a lot of falling forward, and the path can be painfully rough. That's full of peaks and valleys, and it just pushes you to become better, not just with your skill set, but also with your attitude and with your body in terms of exercising it and making sure that you can handle all the tough things that are coming at you. It requires you to keep going even when things get really, really tough. And the world of entrepreneurial real estate is not an easy task, right? Our next guest knows all about this. He started out flipping houses and eventually went on to become a six-figure house flipper by creating a clear path for his life and overcoming his past as a troubled youth. Now, since then, he has flipped hundreds of houses and built a top 1,000 real estate team in the U.S. and now focuses solely on scaling his passive income portfolio made up of commercial strip centers, hotels, and some single-family rentals as well. Now, he is the co-founder of the Aitchison and Adams real estate team, host of the Millionaire Mindset Podcast, and creator of the Rich Life Academy training program. Now, he is also an active member of the Go Abundance and iLife Fully Lived. With all that, I'd like to welcome Matt Aitchison to the show. Buddy, Matt, thanks for coming on, man.
Thanks for having me on, brother. Always excited to jump on, talk some real estate, some life building.
Yes. Me too. Now, guys, if you're going to Matt has to say, you can reach him via his contact page at mattaitchison.com. Okay, Matt, go ahead and tell listeners a little bit about your journey.
Yeah, I mean, I think as most people who get pulled into the world of real estate, initially it was when I kind of created my hit list of all of the things that I wanted, in my career. I'd always wanted to be wealthy and have kind of that lifestyle design and make as much money as you can, no ceiling over what you could earn. But I also wanted to help people. I wanted to be doing things productive in an industry and space that I was passionate about. And I wanted to be my own boss. And, I wanted to find an industry that really allowed me to not only check all of those boxes, but actually build wealth in the process, not just earn an income, but generate and create wealth along the way. And I read, of course, as many people have, really two books that kind of set me onto this path, which was Napoleon Hill's Think and Grow Rich and good old Robert Kiyosaki's Rich Dad, Poor Dad. And those were really kind of what ignited the entrepreneurial bug within me. From an early age, I was kind of hustling and, doing all kinds of fun and crazy things. And then that kind of, led me into doing some not so fun and productive things in my life, which, a lot of my audio, I think a lot of their audio and what they say they want for themselves are out of their life, whether it's in their wealth or their finances or their career, their relationships, their health, whatever it may be, doesn't actually align up with their video and the actions that they're taking. And that incongruency, kind of led me to some turbulence and some friction. I got arrested. I got expelled from high school. I got, into some trouble in college. And it was kind of that fork in the road moment in life where I realized I had to align my audio and my video if I was going to get, to where I wanted to be. And that led me to finding my first entrepreneur. And I worked for this guy, cold calling, and worked my way up to being his kind of right-hand guy. And he taught me business. And when I graduated from college at UC Santa Barbara, I knew that I didn't want to work for somebody else. And I ultimately ended up finding one of those Craigslist ads of mentor seeks mentee in real estate. And I ended up working for this guy for almost a full year for free. And this was back in 2010 when he was basically buying anywhere from 5 to 10 houses a week off of the courthouse steps. So my very first year of basically grinding and, being a slave for somebody else was also the greatest stepping stone and experience and educational, piece that basically led me to my own first flip. I ended up making $106,000 off of the cat lady house. And we all know kind of those houses, right? You've probably seen them on Hoarders, or you walked into one maybe before, where the pee smell from the cats was so strong. I mean, it now is etched in my mind as a great way of making money. But for most people, right, it's disgusting. And helped this woman solve, some financial problems that she was in. Ended up purchasing that house, flipping it, making 6 figures on the first one. And I was 21 years old at the time. I was broke. I had basically funded that entire project using other people's money because I didn't have any money of my own. And it was that kind of aha moment of, wow, if I can find great deals, I can also find ways for money to come to those great deals. And we all win and learn and earn together. And that led me to, flipping a couple hundred houses over the next decade. But what I realized was making an income that was active, on the flipping side. I needed to find a way to continue flipping and earning that income, but also putting that money to work in more horizontal or passive income vehicles to kind of collect that mailbox money, which is why all of us ultimately get excited and attracted to real estate in the first place, is what it can unlock from a freedom standpoint. And so I'd started to earn and unlock the income freedom. Now I needed to put that money to work so I could earn the time freedom, because the time freedom is really, for me, what was so attractive, because then I could spend my time freedom investing into my relationships, into the causes and the things that I was passionate about. But of course, right, there's a path to all of that process. And so that kind of led me into starting to buy single family houses. Then I started graduating to fourplexes. Then I started buying commercial strip centers and medical plazas. Then I fell into hotels about 4.5 years ago. And it's been this kind of evolution of my real estate investing journey as my goals and my lifestyle has evolved. So have the strategies and the vehicles and the, spaces that I invest my resources and time into. And so it's been a beautiful journey. Like you said at the very beginning, a lot of failing forward moments, a lot of breadcrumbs of failure along the path to success, but just continue to put one foot in front of the other and learning and surrounding myself with the right people. And it's been a fun, wild ride, man.
Nice. Well, I want to definitely get to some of the strip center and some of the hotel stuff, because that stuff is very, very exciting. I think especially going into where we are in the economy. But before I go there, I want to talk a little bit about this mentee-mentor relationship. There's so many people that have approached me, and they want to be a mentee, and I've only accepted one of these people. And this guy is awesome, right? He's great. And the only reason why it's happened is because many of these other folks, they don't stick it out. They did exactly what you just said. You went to go work for someone for a year, and it might, in your mind, it was for free. And I use the air quotes for free. But in reality, that person has to train you how to become a real estate investor. So it's actually costing them money to train someone who doesn't know anything about the stuff. And there's value there. That's real value to someone that really understands what's happening. So how did that work then for you? I mean, obviously you're where you are now because of that relationship. But I mean, what for someone listening then, that's one thing that I would strongly recommend. If you really want to get into this business, this is something you may want to consider doing. I mean, Ty Lopez is one of these guys. He did the same sort of thing, right? His first job, he worked for free basically for I think 6-8 months.
Yeah, I think with mentorship, it's pretty much the greatest modern day hack to success.
Hey, Augustino here, and I would love to connect directly with you. Text the word books to 844-428-1344 to receive weekly book recommendations from me.
If you get the right person, right? For me, when I look at kind of the hit list as I did for a career, I did the same thing for a mentor. It was not only do they have the success and the track record that I want to model after, but do they have the reputation? Do they have the network? Do they have the lifestyle? Do they have the core values? Because it's easy to just, let somebody speak into your life about making money, but they could be a really shitty human being and a bad person and influence you positively maybe in how to make money, but also negatively in other areas that may be of equal, if not more important to you to be positively influenced in a good way. So being very careful about who you choose as your mentor is super important. But I look at it as one of the greatest life and business hacks that's out there that, 10, 15, 20 years ago, unless you were a C-level executive or you were paying $50,000, $100,000 to get into, some of these closed room conversations, you weren't getting access to that. Nowadays with technology and YouTube and all the cool stuff that's out there, and just this overall mindset shift that people have around mentorship and giving back. I look at it as the barrel of monkeys. I consider myself a barrel of monkeys in terms of, those plastic little figurines that have one arm up and one arm down. I'm always looking to find my next hand to pull me up and elevate myself, but I'm also looking to bring other people with me along the way. And I think great mentors have all said somebody did that to them before they reached their pinnacle or levels of success as well. And they look to reciprocate that for other people they see that are hungry and are willing to invest and willing to put in the time and willing to build the skills. And, to be able to tap into somebody's, because in my scenarios, some of my mentors, they have accelerated my milestones of success, getting there way faster than I would have by myself. They have accelerated me hitting levels of understanding and skill building that would have taken me years, if not decades, to learn. They have tapped me into networks and relationships and resources that have taken them 10, 20, sometimes 30 years to build. And the right mentor can connect all of those dots for you in a really positive and productive way. And so that was one of the things that I just got really good at over the years, was knowing, one, not the fastest, not the smartest, not the strongest, but I do have a superpower, which is identifying people who have the levels of success that I want and finding ways of bringing true, genuine value to them, serving these people. I asked one of my mentors, I was like, and he's worth $500-600 million. And I said, well, why are you inviting me to fly in your jet and to be a part of some of these meetings and to connect with some of these people and be in some of these conversations? Like, I kind of felt like an imposter, right? Which is many of us do along your journey of success until you look up and you're like, well, I'm actually okay. I'm pretty established. I've got some good experiences. I have value to bring. And he said, I am investing in you as someone did to me, mainly to start because I like you. And I was like, interesting. What makes you like, why do you like me? And I, over the years, have asked the same question over and over. And I think this is a skill that anybody can build when trying to connect and, have relationship with a mentor, which is what I call the likability formula. It's people that are really humble. They check their ego at the door every single day. They say, I know what I don't know. I'm here to learn. I'm here to serve, right? And they have this sense of humility that they're always in a state of curiosity, always looking to grow, always looking to learn, always looking to get better. Then the second variable in this equation is confidence. They are still, even with knowing all of those things about themselves and maybe their shortcomings or their gaps or their weaknesses, they are also still very confident in who they are, what they stand for, what value they bring, how they show up on a consistent, hardworking daily basis. And those two things right there, between humility and confidence, and you put that on the foundation of just being a hard worker, it is hard not to like people who show up wanting to add value, who show up with a humble servant's attitude, and who show up and grind their ass off every day. It's hard not to like those people. And those are the people usually who do those things consistently over an extended period of time that unlock the greatest results. It's the beauty of the compound effect and the eighth wonder of the world, right? You do these things consistently long enough over an extended period of time, it's inevitable that these things are going to happen. It's not an if, it's just a when. So for me, I started getting really good at, getting around the right people, being humble, but being confident and just consistently working my butt off. And all of a sudden you look up in the rearview mirror and you see all of the relationships that you've accumulated, or maybe some of the success and assets that you've accumulated. And you're like, wow, okay, I have covered some ground, right? So that's where mentorship, I think, is such a key for, really anybody that's looking to unlock new levels of success. There's always somebody around you that has got more wisdom, got more experience, got more resources, got more net worth, whatever. There's always a bigger fish out there that you can learn and grow from, but it's your responsibility to go and find who that person is and how you can bring value to them. And, just a quick little tip for many people that are looking for mentors. The number one thing you don't want to do is ask them, can I pick your brain? They get people that are busy and, that suck they call them assholes, right? They're just they're assholes who ask a lot of questions just to serve themselves, and they bring zero value to other people. And oftentimes when they do ask all the questions and they get exactly the wisdom that they needed to go out and take action on and get success, they don't do it, right? So don't be an asshole. Yes.
Right? I know plenty of those folks, unfortunately.
Absolutely.
I know those people, yeah.
But then on the other side, there are, the people who really are genuinely trying to bring value, and you want to be one of those people that stands out from all of the other assholes when you're trying to connect with a mentor. And the simple question you can ask that I would say works 9 out of 10 times is, what does it take to earn 5 minutes of your time? What does it take to earn taking you out to coffee, right? So instead of it being a self-serving yes or no answer, right, it's an open-ended, help me get clarity in what would be valuable to you to earn some of your time, and then I'll go and do it. And so that's ultimately the question that I started asking was, hey, what does it take to earn 5 minutes of your time in order to, understand X or Y or Z? And that question, hey, circle back with me. The smart people who do protect their time, they're going to say, hey, I'd love to connect with you, but circle back with me in 2 months and we'll see about, getting something on the calendar. 99 out of 100 people will not circle back in 2 months. So that eliminates a lot of the assholes itself. But then it's that one person that follows up and was like, hey, I followed up on this day and this time to hopefully earn 5 minutes of your time. What would it take to earn 5 minutes of your time, right? And so you're going to get more clarity in how you can show up to those relationships and close the gap in proximity to getting around those types of people. And then once you're in, it's just bringing value, showing up, being consistent, doing what you say you're going to do, because that's the best way to earn into relationships. It's also the fastest way to earn your way out of relationships when you don't do those things.
Yeah. Well, it's like that private jet example. The fact that you show up, those first 2 items, I think there's actually 3 items in there. The third item is actually show up, right? It's being humble and being smart about what you're doing is certainly key. Actually showing up when you say you're going to show up and do what you say you're going to do is critical. But you know what though? It's making them a priority first. I don't want to turn this to a bitch fest, but I get people that reach out to me all the time. Here are my demands. Here are my demands. How are you going to succeed in helping me get to where I want to go? I'm like, I'm not obligated to do that, and it's not just me being a jerk. Everyone is, we're looking to build our own businesses, not build other folks' businesses, right? That's just what we do. So I think it was probably, as a mentee, I don't want to beat this beat a dead horse here. But as a mentee, you have to make the mentor the priority if you're going to get to where you want to go. Right? They have to be the priority. And I think that's where many people struggled, or that's That's really what many people just don't want to do. They want to get paid for every single minute of every single day. And you know what? Unfortunately, if you don't have the skills, you're going to have to learn the skills. If someone's willing to give it to you, you have to give something up for it, right? Whether it's time or money, one of the two. Something's going to, and I honestly believe that as a mentee, you will get a greater benefit than paying someone $30,000 for a book. I'm not saying there's any, and I'm not saying there's no value in that. I'm just saying that I think as a mentee, you're going to get a lot more value, in my opinion. I mean, I know that my mentee, he's learning way more than I could have ever taught one of my mentee students rather, for sure, bar none, so. Absolutely. That's awesome. I think that's hopefully for the folks listening that they'll take this to heart. It's great information. So, but let's talk about your other businesses now. So I know in the green room, we're talking about how you were doing some of the C-class stuff. You've since moved away from all those types of syndications, and now you're moved into the I guess medical net lease. And then hotel, I don't know what the progression was within those two. So tell us about that transition then. So I know you had a bunch of apartments, sold it off, and then you decided to make that change. Like what prompted that change?
Yeah, no, I mean, most of my stuff, apartments still hold. The commercial strip centers and medical plazas still hold those. So, I've got what I call my ground game and my air game. My air game is like my big flyer that, I'm going to consistently build, give my active time to, and, ultimately it's a build to sell business model, which is my hotels. We're working towards 2,000 keys and ideally, selling off the portfolio for $250 million. That's my BHAG for that. That's my flyer. But my retirement plan and my ground game, my slow, steady, stable, mailbox money strategy was a few years ago that I said, okay, because this is what I think most people miss when it comes to crafting their investment strategy and vehicle, which is, what are you solving for? If you're trying to make $10,000 a month in passive income and you're buying, $80,000 single family homes that generate you $200 a month, well, that's going to take you a lot of single family homes to get to that $10,000 a month in passive income. And if that is not a strategy and a vehicle that you ultimately want to deploy in order to get there, then you got to retool your strategy to fit based on your time, energy, and effort you can put into building that and achieving that.
I want to take a pause from today's show to share something that I've been encountering. As I speak to many investors, there's this concern, and the concern is centered around the inflation we've been experiencing and the devaluation of our currency. Now, we've seen some of the highest inflationary periods over the past 30 years. That's up over 8%. Economists actually believe that inflation is closer to 20%. Some say it's even more. Now, what does this mean for you? Well, it means that money that is sitting in your bank account or self-directed IRA that's not invested in physical assets that hedge against inflation are losing buying power. That means that every minute, every second, that dollar is becoming less valuable. You see this every day. You see this in the groceries you buy, the gasoline you buy, everyday items that you're buying on a daily basis are becoming more and more expensive, and you're using a less powerful dollar to buy these items. Meaning that dollar is losing value if it isn't put into a property that produces cash flow, just like real estate does. Now, our team here at Bulletproof Cash Flow has put together a series of weekly webinars that cover real estate investing like multifamily, net lease, and real estate development. Now, these are purely educational webinars. In these webinars, we talk about why real estate offers a powerful opportunity right now and why it makes sense to invest in these assets today. So, if you're interested in real estate or want to have the opportunity to get involved as a hedge against inflation yourself, I encourage you to go to bulletproofcashflow.com/webinars. That's bulletproofcashflow.com/webinars. Now you go there, these webinars are 45 minutes and they cover different topics every week. We go over the things you need to know to avoid some of the common pitfalls when it comes to investing while getting you prepared to invest your paper dollars into a real physical asset. Now, if you can't make the webinars, just go ahead and register and we will send you a recording that you can watch at any time. And by the way, these webinars are entirely free. There's no cost to you. This is just something that we do to educate our folks out there. So if you're enjoying this episode, please like and subscribe to Bulletproof Cashflow. It helps the channel tremendously when you do. Now let's go ahead and get back to the show.
What it is that you want to, commit your time to going forward. And so for me, I said, I want to make $500,000 a year in passive income within 10 years. This is when I turned 30. This was 4 years ago. And so for the last 4 years, basically, I have made it a goal that one asset purchase per year that nets me $50,000 a year in passive income. When all is said and done, when all expenses are paid, when, debt service is covered, my true net brings me in $50,000 a year. And so I started underwriting assets that ultimately produce that type of income. And so over the course of the last, 4 years, I've bought at least one commercial asset a year that nets me $50,000 a year. And if I do that from age 30 to age 40, and I buy one a year at $50,000 a year net over the next 10 years, by the time I'm 40, I'll be generating $500,000 a year in passive income. And so that was my ground game. That was ultimately, I said, here's my timeline of when I want to achieve this. Here's my number that I want to be at the end of that timeline. What do I need to do and reverse engineer what the steps look like? Because at the end of the day, I can do one a year, right? So asking yourself, what is the one investment that you think you could commit to doing every single year? And then you go to work and figure out, how do you craft that plan? What market has those types of assets that produce those types of returns? What kind of vehicle and asset class do you need to invest in? What relationships do you need to build in terms of what brokers and people bringing you those opportunities? What lead generation strategies do you need to deploy? And also what types of financing relationships, whether that's your debt, whether that's equity and people partnering with you, or if you're going to do it by yourself. So understanding what you're solving for is the end game, and then working backwards from there gives you the ability to craft that strategy. And then once you're clear on what it is, it's just executing on it. And everybody can do at least one thing a year. And so that was ultimately kind of what led to my ground game strategy, which was my, medical plazas and strip centers. And then the hotels is more of my active, I'm trading time for money, but I'm building out my business. That ultimately is something that I'm going to look to exit long-term. But I know that my retirement, my moat around my wealth and my income is my ground game. And, if nothing good happens with the hotels, which I know it will, but if theoretically, worst case scenario, nothing did and it all went to hell in a handbasket, at least I'm buying one asset a year that continues to build my balance sheet, that continues to give me all the tax advantages and other advantages of real estate, and of course, building my passive income. And so that's what led me, down those two different paths, and, continuing to build wealth through commercial real estate, which I believe, being in single family for a long time, I was, working and consulting and selling off a lot of real estate through Invitation Homes and a lot of the different hedge funds back in, 2010 to 15 when there were foreclosures everywhere. And unless you're doing single family at scale, massive scale, it's a slow burn. And there's nothing wrong with that, but it just wasn't going to get me to where I wanted to go by the time I wanted to get there. And that's where I started kind of graduating up and getting really interested in learning and sharpening my pencil in commercial real estate. Because when I started, on my very first hotel, within 12 months, I took, an asset, which in commercial real estate, as many listeners know, and if you don't, the value of a commercial asset is based on net operating income and the cap rate. And so when I learned that if I can increase the net operating income of an asset, and based on whatever cap rate that's trading at, bake in a bunch of value by sometimes doing very little, if not just pushing paper and changing, terms to leases that help drop more income. There's a lot of creative ways and strategies that you can get a really high multiple on your time and the effort that you put into your commercial real estate. So on my one hotel, I took it from, I basically increased the net operating income by $100,000. and that $100,000, for cap rates that were, tied to those particular assets, if you take $100,000 and divide it by, an 8 cap, 0.08%, that's $1.25 million that I just baked in value into that asset over a 12-month period. You can't do that in single family. So that's why I got really excited about commercial real estate and understanding the different strategies and things that you can do to really multiply your time as well as your income and your net worth.
So that hotel that you just talked about, was that something that needed a bunch of work or updates, or
it was value add?
It's called it was a PIP, a property improvement plan. For those of you guys that are listening, if you guys are getting into the hotel business, sometimes they'll put these hotels in like a fire sale to get rid of them because they don't want to put in what could be a tremendous amount of money to update everything, all the rooms, all the fixtures. Could get very, very expensive. So, Matt, was it one of those deals, or?
It was, yeah. So essentially, and this is the beauty of having a personal brand. This was brought to me through one of my Instagram followers, and
nice.
They said, "Hey, we've got this deal, and we think it might be up your alley. It's in your neck of the woods." It was a hotel up in Lake Tahoe. And I was like, wow, this is a good deal. This sounds great. And I had never bought, a hotel before. And the one thing that I learned very quickly is hotels, unlike other commercial real estate assets, are truly 24/7, 365 operating businesses. So that's the difference between hospitality assets. For anybody that's interested in hospitality, when you go and look at a lot of the billionaires historically in the world, I would say over 50% of them own hotels. So they are high yielding assets. They are also high operational assets. They require a lot of team and physical operational management. And so I learned that the hard way. I was going, oh, this is going to be great. Just like my apartment building and, all these other commercial assets, when I get them on triple net, it's going to be passive. I'm going to kick back. No, that was, a learning lesson, right? That I went through as what I believe to be a seasoned investor at that time 4 years ago. There's always areas that you're going to learn and grow, and every asset class has different pros and cons tied to it. And so this one, the beauty of why I love hotels, is one, high cash yield. There's a lot of tax write-offs that you can run through the business. The fact that it has all the other traditional real estate advantages, but also it's got a really great way of hedging against inflation because you can reset your rates daily. So instead of being locked into a 5, a 10, a 20-year long-term lease, which again, there's pros and cons to that. On the hotel side of things, I'm capturing that 9.1% of inflation, you better believe, in my average daily rate as I reset my rate daily on capturing what's going on in the current economy and in the market, right? I can also hedge my bets if it were the alternative. So hotels have, some cool advantages, high cash yield, the fact that I can take my family and go stay at my hotels and create experiences and memories. I can't do that with my medical plaza, taking my kids over to the hospital or the pharmacy, right? But I can go and take them to the hotels and go to the beach and have fun and create those experiences. And that was something that was important to me and was specifically tied to my goals. But at the end of the day, it's also a living, breathing business. So, you've got all the challenges that go along with having big tranches of employees and, physical operations, asset management, marketing, sales, finance, right? A traditional business model. So there are obviously some cool stuff that go along with it, some challenging things that go along with it. But at the end of the day, that's how it is with every asset class. Understanding every asset class is kind of like its own unique individual chessboard. And when you sit down to that chessboard for the first time, I don't know about you guys, but the first time I sat down to play chess, I was like, okay, so how does this work? Like the king and the queen and the pawn and the bishop, and how do I play this game? What is the strategy? Who am I playing against? How do I win based on what I'm trying to do here, right? And by the 50th time of playing chess, I know how to win. I know what strategy. I know how to play the game at a much higher level. And so when you sit down and you're looking at any new investment, any new asset class, whether it's a syndication and you're going to be passive, whether it's an active investment and you're going to own and operate yourself, whether it's a, investment you're going to hire property management for, whatever it may be, take the time to learn the rules of the game you're trying to play and the game you're trying to win. And I think that's a really important piece when it comes to real estate investing, that no one is going to care about your money more than you are. No one is going to care about your asset more than you are. No one is going to care about your business, your brand, your reputation more than you are. And so therefore, it is your responsibility to make sure that you put in place the proper people and the proper systems, and you have the proper disciplines, habits, and routines around those asset classes or around those intentions and those goals. So that way you get the outcome that you want. Make sure the audio and the video align.
Exactly. Love it. So with the hotel then, is that is that a flagged hotel, or is that
all boutique?
All boutique. Okay, good. So, and again, for the audience, flagged means Ramada, Holiday Inn,
franchises,
Hyatt,
franchise agreements.
Franchise.
Yep. Yeah. Yep. Franchise agreements. So, you got the Holiday Inn Express, you got the, Comfort Inn and Suites, you got Hilton, Hyatt. Those are all franchises. Those are all flagged assets. And my thesis is hotels are going under a renaissance right now, where it's a very old and archaic industry that has really been dominated by a very few large brand names. They become somewhat sterile. They become somewhat boring. They become somewhat, you know exactly what you're getting. And oftentimes people now want something different. They want something unique. They want something custom, and they want something boutique. And that's something that I'm very bullish on. And I think, one, we're already seeing a lot of the big flags start to pivot and come out with their own boutique brands and collections. But I think this will be something going forward that travelers, don't want to stay at the same beige, boring, kind of sterile hotel. They want something cool, eclectic, unique, custom, edgy. And that's something that not only will they expect, it's something that they'll demand going forward. And so I am all about boutique hospitality brands creating one-of-a-kind custom experiences with the asset to pair with whatever the location, represents and provides for the guests. So all of my hotels are boutique.
Yeah, excellent. So I have to imagine then, if you're able to demonstrate in your whole portfolio of boutique hotels, they can demonstrate they have enough strength in terms of NOI that each one is throwing off. You could eventually sell off the whole thing to, if you wanted to, one of these branded or one of these flags, and they can, if they wanted to convert it, they can, or maybe sell to some sort of private equity group that wants to continue running it. I guess it really depends, and my experience just comes from, we're talking in the green room about it. Like, we're looking at buying some hotels too. We've been talking to Peachtree, which is an excellent management company, but they only do these flagged, only a handful of these flagged type of hotels. That's all they do. That's it, and that's perfectly fine. That's okay. But I think at the same time too, it's like you're building up the value, and to your point, you've built it up high enough, you can eventually sell it off. I imagine that's what your plan is, right? To one of these flags, right?
Yeah, institutional investors, they want scale, right? So you got to hit scale, and again, the business can't solely rely on one person. It's got to be a true business, right? These people, when they follow these systems, produce this result year in and year out. And therefore, that's ultimately the way we've been building the business. And, how we structure our team and our departments and how we run our meetings, it's to be structured as a real company. So, if I'm gone for 3 or 6 months at a time, it doesn't matter. The hotels are still running, still spitting out good reviews, still spitting out profit every month. People are employed, customers are happy, our brand is continuing to grow and expand. And that's what institutional players buy. They buy income streams. And the way the business is structured, the fact that we have a hotel, which is an operating business, within a physical asset gives it, one, some extra juice to provide, which institutional investors like, but it's also a little bit riskier because if that business breaks down, that asset income breaks down, that asset value goes away. So having that really dialed in, really streamlined is very important. And that's ultimately, what our, thesis is if we continue to build a great company culture, happy employees equal happy customers, which equals happy investors. And if we continue to do that at scale through an asset class, which historically is very challenging to operate and win within over the course of the long term for non-business owners, non-institutional level investors, the mom and pop space, which is ultimately where we're playing in. We're working on boutique that isn't at institutional levels, but accumulating boutique to play and hit scale of institutional levels. We think that there's a blue ocean there that we're excited about playing in.
Nice. So for this business and for your strip centers, are you using syndicated money for that, or using your own money? How do you put those deals together?
Yeah. So for strip centers, I've got one partner for those that I brought in. And then for the hotels, I've got one partnership group on those as well. So I haven't syndicated any of my, only syndicated the apartments, laundromats, other businesses. When it's come to my own kind of personal portfolio, it's just been on a JV partnership level.
Nice. No, love it. That part is great, because one thing, and we talked about this in the green room, is that the difference between doing a syndication of, say, a C-class asset versus a net lease strip center or even hotel these days. I mean, there's some cap rate compression taking place there. I can see it. I mean, you'd know better than I would, but I know that it's happening because money's trying to find other assets to invest in. Yep. But the returns net, when you look at the bottom line, are very different, right? They're very different. They tend to be, well, they used to be higher in multifamily than they were in these other two assets here, the net lease and the hotel. But what I often talk to investors about is a risk-adjusted return. These are three different assets, the three different levels of risk, and a C-class asset is certainly going to be very, very different than a hotel, than a Hyatt or even a boutique hotel versus a medical strip center, which is always going to be around, provided something catastrophic happens. Have you ever? I guess it sounds to me though you never really had to face any of these issues because you're dealing with JV mostly, right? So you don't really have to solve for that, right? Yeah, I mean, you mean solving for the outside investors coming in that don't really understand the business. Yeah, I mean, I don't. For me, just because you can raise money doesn't mean you should take money, and ultimately, suitability. I think there's a lot of different things that, come into if you're going to take someone's money, making sure that, I think number one is, suitability is a big thing. If somebody doesn't understand it, or if it's not ultimately suitable to achieving their goals or meeting their expectations or hedging their risk or downside, then don't take their money. Of the hundreds of LPs that I've raise capital from, I've never lost one investor's money, and I've never not hit the returns and underperformed based on what I promised them. And that's something that I'm really proud of, because I know a lot of syndicators, a lot of people that raise capital, that they don't have that same intention. They don't have that same, level of integrity and ethics, and, core values are really, really what drives everything I do. Everything. And I don't say that lightly. I don't spend time with other families that are going to influence my kids or my wife or me unless we're aligned on core values. I don't go and get into business with people and take their investment capital if I don't feel aligned with their values or they don't feel aligned with ours. I don't go and do a lot of things based on our values. And so whether that has to do with money, whether that has to do with your career and what job you do or don't take, whether that has to do with your health, whether that has to do with your marriage, values is the foundation that everything I build on gets pointed back to.
And so I think when it comes to, to answer your question is no, I don't take anyone's capital that I don't feel aligned with them in terms of the vision of the particular investment, the strategy of how we're going to do it, the team that's in place. And ultimately it comes back to the expectations, right? Which is you set proper expectations of here's what I'm expected to do and here's what you're expected to do. Most of the time, if it's an LP, they're not expected to do anything. Give us your capital. And based on, the offering that we shared with you and the timeline that you should expect to hear from us, and you should expect to get returns, and you should expect to get your money returned to you in full, don't bother us, right? Set the proper expectations. Right. But if it's somebody that, hey, we're going in partnership together and I need you to do X, Y, and Z in addition to providing this capital, right? Does that person have the ability to do so? And if they don't, then don't take their money. Don't get into business with them. So I think it's just clarity around expectations, suitability, and ultimately, I don't just take money because it's available. I make sure that I have a different set of criteria that needs to be met holistically in order to determine if there's going to be synergy in a joint venture or partnership or a particular syndication investment.
Yeah, I think that's worth reiterating there is that just because you need money for a deal and you may have someone that wants to invest, but they're not the right investor for that asset, don't take their cash. I think a lot of people feel like they like if they're taking grandma's last $100,000, you shouldn't be taking grandma's last $100,000. That's all she has. You don't take it. Let her keep it.
Unless it's suitable for the investment, right? I think what it comes back to is like I think it's, risk profile, suitability, expectations, but at the end of the day, the way I look at everything is I'm about the lifetime value of a particular relationship, not the short term. If I took somebody's money to serve and fill my own need in the short term and I wasn't doing best by them on the lifetime value I know I can give them, then ultimately I'm going to kill that opportunity to do more deals in business together because I was short-sighted. And I think that's one thing a lot of people, wealth is created in the crock pot, not the microwave. The best dishes are made in the crock pot, not the microwave. It's the same thing with your wealth. It's the same thing with your relationships. And the way I look at it is you do right by somebody the first time, and sometimes doing right by them might be saying, hey, this isn't the right investment for you. This isn't the right deal, but I do know what you're looking for now, and I can make sure that the next time we have an offering or an opportunity that falls into that bucket for you, that you're notified of that and you can determine what makes the most sense for you. And somebody will be like, I've turned people's money away and they're like, oh my God, take my money, dude. Like you have to have my money now, because most people would have just taken my money and it was only self-serving to them and it maybe was or wasn't the right thing for me. But now that you just did that, it's like you earn this level of trust and integrity with people that you do right by them. They're going to, every investor that I've had do a deal with me has been a returning deal and at least a returning investor in at least a second or a third deal. And so really doing right by people, you want the lifetime value of that relationship and the ROI on that, because maybe you don't make a ton of money off them on the first or the second. And then all of a sudden 3 through 10, you absolutely murdered it on, and you would have killed yourself if you tried to get greedy on the first or the second deal. So right now, most importantly, I think you talked about it a little bit earlier, is like this greediness factor. Now is not the time to be greedy, especially in a market shift. Now is the time to be prudent. It's the time to be ethical. It's the time to be honest. It's the time to be diligent, consistent, disciplined, and know that as we go through a shift, there's going to be some opportunities that shuffle out of this thing. Money shuffles in a recession, talent, individuals, people looking for jobs shuffle during times of recession, opportunities open up during times of recession. And the last thing you want to do is be short-sighted or overly aggressive in a shifting market like we're seeing right now. I mean, with the Fed, continuing to raise interest rates as they did last week, 75 bips. They're planning, at least in their September Federal Open Markets Committee meeting, they're going to do it another 75 if they're kind to us, maybe 50. I think today I was just looking at the 30-year fixed mortgage rates. They dropped down to 5.13%, which historically is still really good money if you can lock in long-term fixed debt. Home sales have decreased 8.6% in June. We're seeing inventory is up 32.3% year over year. It's up 124% since March. So, in the market, we're seeing supply and demand start to shift a little bit. So you don't want to get caught in the shift. And, most of the people that are, I call them smart money, family offices, private equity groups, hedge funds. Smart money has way more resources and knowledge than we do as the retail investor. And the best thing that we can do is just check our ego at the door and go, what is smart money doing right now? And right now, smart money literally is on pause, at least in real estate acquisitions, unless most of the analysts I've talked to, at least in some of the shops that I've got connections to on Wall Street, they're underwriting 20, 30, sometimes 40% lower today than a month ago. So if one of those opportunities comes across their plate and all the boxes get checked, they're going to buy because they're macro, they're long term. If you can weather the short term, right, you're still going to win long term, but the deals have to make sense in the short term, and you don't want to get caught with your pants down. And I think we're going to see a lot of people who maybe got into some good debt, but are bad operators, bad syndicators, bad, at ultimately, asset management, that are going to create some cool opportunities for people that are being smart, prudent, diligent, disciplined, and looking at when the right opportunities present themselves, how do they get in there and capitalize on those? And they're coming. They're not going to be 2008 level-ish. That's just not the market landscape that we're going into. But in times of economic cycles, we're one day further from the peak, we're one day closer to the trough, and ultimately there's going to be some opportunities that shake out of that. And, the prudent investor who does the right thing, who's looking at the long-term game and is consistently looking to plug the right people into the right opportunities and can actively and diligently manage and operate assets, they're going to win. They're going to win. And there's an exciting opportunity that's coming out for those people.
Yeah, I think in the next 24 to 36 months, we're going to see a big shift. Just those folks you just talked about a second ago, they found maybe got some good rates, but they're not really good syndicators. I think the last 3-4 years demonstrates that anybody that has a pulse that got into real estate thinks they're geniuses because they made a whole ton of money at this business, and they just got lucky. Yeah,
you got paid for being. You got paid for making mistakes, right? Because the market just kept going up. Yeah. You had a construction project go over timeline. Oh, don't worry. 20% increase in values, over that time frame. So now it just requires people to be, if you're going to invest, your team matters more now than ever. Having the right people around you in the right seats is going to be critical. And if you're giving your money up to somebody else, you better trust in that team. You better trust in that deal, because what I can tell you is I saw a lot of pretty pro formas and a lot of shitty teams. And you can make a pro forma look great on paper, but if the team can't execute on that strategy and bring that actual value to life in the real world asset, it doesn't matter. So understanding who you're investing with, what you're investing in, and of course, the macro level of, what timeline and vision that looks like going forward. I'm excited, man. I'm excited for a lot of the investors that are linking up with the right people. I'm excited for a lot of the operators that are finding these opportunities. And don't read headline news. No matter what they say, there's always a bull market somewhere. There's always opportunity somewhere. There's always great deals and cash flow somewhere. You just got to be running with the right people and finding those, needles in the haystack right now when it's a little bit more challenging.
100%. Yeah. You got to get your head, you have to have your head in the game all the time. That's how you find the deals. All right, Matt. So I know we covered a lot of stuff here today. What sort of bulletproof advice would you have for someone listening today?
Man, I think when I think about, for most people, it's stamina when it comes to being successful. And most people, They run these short sprints, and they don't strategically understand the process and the discipline and the habits that are necessary for winning the marathon and the long run race. And so I think, this was shared to me at a recent event, and I figured it'd be a nice piece of advice to share with some of the people in your community on the inevitables of success. These are things that are inevitable if you can accept them, if you can understand them, and you can use them in terms of how you craft and formate the strategy and the actions you take going forward. They will serve you. Number one is you're going to feel pain. Pain is a part of the process to anybody being and unlocking success that most people who are afraid to take risks don't put themselves in a position to experience. So you will feel pain. Number two, you will lose some friends along the way. You will outgrow people, you will outgrow relationships, and you have to be okay with allowing the editing and auditing process of your goals and your network and the people you're spending your time with give you permission to outgrow some of those people. Number four is you're going to have your own family. Number three is you're going to have your own family discourage you along the way. You're going to have people that are going, you're crazy. Like, what are you doing? This is too risky. Who are you to think that you can go and do this? And the only person that has to believe in what you're doing is you. One of my favorite quotes is, I'm just dumb enough to believe in myself and smart enough to take action every day. I don't need anybody else to give me permission to go out and be successful, and neither do you. Number four is people will hate you for no reason. As you go and do things that other people are afraid to do themselves or couldn't do themselves, then ultimately, right, they're going to naturally want to hate. They're going to want to gossip. They're going to want to talk trash. And you just have to be that much more convicted to turning up the volume on you and turning down the volume on them. Number five is you will almost talk yourself out of it 100 times. I'll go back to a quick, in that first year, working for that guy for free, 6 times. I counted 6 times, at least consciously. I'm sure there was a lot more subconsciously. 6 times I thought about quitting. I thought about real estate wasn't right for me. I thought about this is too hard. I thought about this is too risky. I thought about who am I to take these risks and think that I can go and be successful. I thought about going and getting a job 6 times and giving up on my dreams, and thank God that I didn't. Number 6 is you will doubt yourself thousands of times. And all I can say is doubt and fear, when you push through those things and you get to the other side and you still take your pulse and it's still pumping, and you still have a house to lay your head under, and you still have a warm toilet to go put your nice little cheeks on, right? You have the ability to turn that doubt and fear, when you overcome it, into confidence. And you do those things over and over again, the noise and the doubt and fear starts to become a little bit quieter, and you start to become a little bit more confident. So know that you're going to doubt yourself, know there's going to be fears, but push through those. Number 7 is you will think you're going crazy. And the beauty is, when you listen to the Bulletproof Cash Flow Show, or you listen to other communities and podcasts and groups, you start to realize that, oh, there's a lot more people like me. So get in the right circle so you don't feel crazy. The next one is you will lose money. Like, if you're going to take risk, whether that's a bum marketing strategy, whether that was giving, money to somebody that probably shouldn't have, maybe that's making an investment and taking a risk and you learned along the way. If you do these things long enough, you will win big over the course of that timeline. But just know that there's going to be some learning lessons and potentially some money lost along the way. And the last one is, it's all worth it. It's all worth it. So, craft that strategy, get the right people around, start taking action, especially in times like right now, which feel uncertain. The best way to create certainty is to take consistent action on goals and the next right steps that you think are aligned with you achieving those things. And just have that moment to moment awareness to know that you can take inventory of what's working, what's not, keep doing more of what is, do less of what isn't, and keep taking those steps forward.
Love it. Love it. It's a great foundation for the most important organ you have in your body, the one between your ears. That's what it is. And that's how you, like you said, getting that certainty. There's certainty out there. It's, it's right here, right between your ears. That's where it And I totally agree. All right, guys. Well, if you want to reach out to Matt, you can reach him via his website at mattaitchison.com. We'll include a link in the description as well. Thanks for tuning in. Hope you got some insight on the hotel business and, of course, medical office. But, also, the entrepreneurial road is certainly not for the faint of heart. But you know what, though? Just as Matt pointed out here a second ago with those 10 items, right at the very end, it's totally worth it. It is totally worth it. It really is. You just have to have the guts to make it through. Thanks for tuning in. I'll see you next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, hit up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.